After 20 years of trial and error in trading, this is the strategy that I use. And this time I'm revealing it and giving it to you that you might need to give you a step-by-step approach on everything you should do, different types of entries, as well as what time you should trade this strategy. This is going to be your guide to trade the London kill zone, so make sure you'll see the video until the end. This is Mike from ALGORITHMIC, and let's get into it now. Okay, guys, so starting with this, and by the way, for the people that don't know me, I've been using this strategy since March 2022, and this is what I look for every single day. Even when I start up Discord, always going to Discord in the London kill zone and look for the specific setup. A lot of people, sometimes people ask me, oh, why do you do that and why do you do that? And I decided to create and explain into detail and show you my highest probability of setup. So I'm having everything on details here for you today. And I also want to make something cool. I talked about this strategy before, but not in this level of detail. This one is more refined and offers more detail. Talked about this before, looking at the Asian high and looking for the sweep, but this one is much more detailed. And we always execute in a specific time window, so price and time are very critical. So starting at the price and the timing on this setup, so it starts from 1:30 to 3 a.m. Eastern time, New York Eastern time. Always come to the chart at 2 to 3 a.m., maybe 30 minutes before, 1:30 a.m. to 3 a.m. So 1 a.m. EST, and we're going to be looking into the Asian session. So the Asian range starts at 8 o'clock until midnight. So this is all EST, New York Eastern time. All New York times, all the times that I mentioned on the video. So I'll be looking at the Asian range. First of all, I want to say the Asian range being a range and not trending. So it has to consolidate. It should consolidate because it's part of accumulation. We should have it as a range. We don't want to see it trending. So we want to anticipate a fake out of a range afterwards. So it's only important to trade a ranging Asian range. So we want Asia range to be ranged, consolidation, accumulation. We don't want to see it trending. So we're gonna have a fake out if that's the case. And I see a lot of people doing this. So another thing is I want to be marking the points of interest, the POIs. So there's the low and the high of the Asian range. Now I want to go above and below and look for points of interest. Look for either for value gaps, order blocks, breaker blocks. It doesn't really matter of kind of point of interest. For me, it's a very fair value gap or top of the PD arrays. So that's the main important part. If you know about the daily bias, sometime we will be ignoring some points of interest and some specific ones we'll be looking for if we know where the direction is. So the final daily bias for this day is to go short in this case. So we'll be waiting for the day to open and then we're going to wait for price to go up and then come lower, right? So my direction would be going up into this point of interest. If we have a point of interest below here, all the way down, not going to take the top, right? And why? Because my daily bias is bearish. That's why I want to see price going up into a point of interest in the higher time frame and going low. You can doing it much better if you understand the bias. We can assess that later on. We're going to look for the Asian range to have low resistance liquidity, LRR. What's the difference between higher resistance liquidity and lower resistance liquidity? So when we're having price going up, taking a high and then becoming lower, this level when taken is a high resistant liquidity. So we had a liquidity above, for example, right here. We had a liquidity above. It took that liquidity, and that's the high resistance area right now. It's because we have a higher and higher high. On the other hand, if we have this high all the way here, and then we're going to have a failure string, and we're going to have a liquidity and more liquidity. Same one here. What we're having is the Asian range was actually building liquidity here, and then we have failure swing, so a low and a higher low. We had liquidity created and more liquidity. So we'll be looking into these liquidity pools to be engineered into the engine session. So we want to see a low resistance liquidity, and this is going to give us another confluence that, okay, price is going to go to this point of interest. And then the ultimate target would be taking this trend line liquidity or this low resistance liquidity. That's the second thing. So now at midnight, New York time, at the time that the candle that opens at midnight, we're going to mark this level. And we're going to thinking shows about this level and below, longs below this level. But when my bias is bearish, I want to see price going above the midnight open in order to go short, and the reverse if we intend to go bull. So this is very important too. From midnight, trace a horizontal, deline what is currently above that and below, so premium and discount. Always sell on premium, always buy under discount, above the midnight open. So that is above the midnight open, for example, and I'll be intervening from there for the midnight. So this is another confluence that we're going to be looking at midnight open. We want to make sure that we are above the midnight open in order to go short. Now, another thing, and that's one of the most important things that I had to refine the setup is with the midnight open and the POIs, point of interest. The last thing is the Q2 manipulation. So based on the quarterly theory, we know that even though the day has 4 quarters, first one is accumulation, second one is the manipulation. So the second quarter of the day is the London kill zone or the London session, but the second quarter of the London session itself is from 1:30 to 3 a.m. and that's the 90-minute cycle that we have has Q2. That's where most of the time the manipulation happens, and this is where we're going to be focusing in order to catch the manipulation right there. And a lot of time you're going to see from the chart that the manipulation happens at this time. So if there's any sweep of a high or a low, and even if the high of the Asian session wasn't swept, we're going to be looking for the sweep to happen between 1:30 or up between 1:30 and 3 a.m. That's when most of the time, especially if you are on Tuesday, that's when the high of the week or the low of the week will be forming. Let's forget about the weekly and let's go for the daily. This could be also the daily high or low that could be forming the high of the day or the low of the day on this time period, and this is normally the case. You should notice that. Don't trust what I say, look at these charts. And we're going to go into higher time frame, looking for an entry, POI, and look for any time of entry here. Now it could be either looking for a liquidity sweep, or we can wait for the mitigation of a liquidity sweep for an FEG, for example, or a mitigating after price mitigating. So we can enter on the manipulation immediately there with a risky entry, or wait for a fair value gap there and enter from the mitigation period. So these two types of interests are the main ones. Lower time frame interest, you got market structure shift. Basically, we have this type of entry. We can take in a high and also closing below the low. That's a market structure shift. Could be a CSD, which is a change in state delivery, which is price delivering with the buy program here, and then suddenly it starts dipping, engulfing of that candle, and we have the creation of an order block, and we're looking into this order block to hold, and this could be an interest C2, or simply when price sweeps this point of interest, we just wait for the creation of an imbalance, like a fair value gaps, and the first fair value gap is created. Normally is due to an so for different types of differences, go for the one that interests you. You can directly access it from the mitigation, but usually the mitigation will be the market structure shift, and enter for the mitigation from the chart. Change of stage delivery will be the turtle soup, so we don't wait, you just enter directly without waiting for the fair value gap. Or the first fair value gap, which is cool. Now, what do we target? Simply, it will be looking for any reaction from the midnight open, some partials there if it's worth it, and then extend all the way to where? To the lower resistance liquidity in simply the Asian low, or the opposite side of the actual Asian side that was mitigated with a liquidity sweep, or any other point of view. It depends on the daily biases. You don't want to be overconfident on this. I want you to take trades with 10, 15 hour. Stick with decent risk, 3, 4, 5 to 1. These are very good, but make sure to take some partials on the way. And I think I forgot to mention that we always look for the lower time frame off entry after taking the Asian high into the higher time frame point of interest. We don't take any liquidity sweep. We take once there are into a higher time frame point of interest. It could be the M15 minutes, and we're looking at it 15 minutes. We're looking to this in the 15 minutes, and then we go 15 minutes. We can pick it up the point of interest there, or on the 1 hour, or on the 4 hour. You know, it could be something like that, same time frame or a higher time frame, but higher time frame points of interest drop to a lower time frame to make sure that you see the actual entry points. So make sure that by this point you know all the checklists. We're going to go over the examples now. Now, starting with the first example, and this example happened about 2 days ago. Like, I think I added an exclusive to this one, this quarter, everyone, but like, we're starting with the first thing, looking at the Asian session. Is it really trending or not, or an expansion? Not really. It's mostly ranging. This is the logic behind the Asian session and how to look at it. What do we see here? See a high, a higher high, and a higher high. Now, again, we have liquidity here, but it's taken. We had a new liquidity form, and it's taken. Now look at the other side. So we look at the tops, and now I look at the bottoms. So even from here, like this low before the Asian session, and that, but then the Asian session, this is the first low, and we had liquidity, and then we have the second low, and a lower lower or a higher low. This is a higher low, so that means that we have more liquidity there to be taken out, which means that it's very nice take profit to place. It could be even take profit at those lows. That'll be a lower resistance liquidity run. So now we know we have this liquidity level in those earlier swings. There we go. And we can actually extend it to this one, because this is happened on the Asian session, but not the ICT one. So we can actually target this one as well. Now, asking ourselves, what is better now? Is it to go short or it to go long? We don't know yet, right? So what we're currently looking for shorts to target those for sure, but we're going to be marketing all the POIs that we have on both sides. Now, for the longs, we have an interesting point of interest, which is this fair value gap and this order block. We're going to be marking this one. And on the upside, we have is nothing there. Pretty much we have maybe this order block, but we have unfit part of a fair value gap there. We filled this part of the fair value gap until there, and now we have this tiny little part as well as the order block. A candle that created a fair value gap is an order block. So we're looking for this fair value gap and its order block. So we have a point of interest above the Asian range, a point of interest below the Asian range on a higher time frame. We're currently on M15. Just notice that. You can see that we're looking for the bearish side more. I want to see price going up, manipulation, and coming lower. Why? Because we see those swings. The liquidity is telling us what to take. On the 15-minute, we're on the 15-minute chart. Lower time frame that we're going to be using could be the 1 minute, 2 minute, 3 minute, and 5 minutes. It's pretty much what I use. 1 minute will be too aggressive. 3 minutes will be ideal. Five minutes will be too much. What time do we look for the trades? Well, we're going to look at 1:30. We map them with vertical lines, and all I want to see here is manipulation happening in this point of interest. That is the only one that we see, and this liquidity sweep, and here it will not be valid. And the reason behind that is because basically before the quarter two, it's before the second quarter that we look for the manipulation. So we're going to wait for price to take, for example, this high or this high, into the actual point of interest, right? So basically it needs to take this high in order to reach the point of interest. Right now, anyone who entered on or looked for a sweep on a lower time frame or here, some people will be forcing it, chasing price, not nice. So don't chase price. It's not really on the right timing. Right timing is 1:30 to 3:30. That's the time where the high or the lower of the day would mostly occur and be formed, as well as the manipulation. We can see that when price going up, we can see that there's a sweep of that high. So we can drop into a lower time frame, like 3 minutes in this case. In this case, we're going to look at the M3. And the next example, we'll look at only 1 minute, but I try to give you all the different approaches into this so you can see. So in here, we have market structure shift. It should be that low unless we create something like that. But mainly for now, as of now, we're looking for this low. Where market structure shift or change of exchange delivery or something of the like nature will happen. So remember, if we have a market structure shift here, let's say something like this, and we have a fair value gap, and the price just drops directly lower and it starts going up from here, are you still going to enter from this fair value gap? No, not really. Because we already took the liquidity so it's not going to be worth it, and it's going to be much lower probability. We don't want it. It's not an A+ setup. So let's play a bit, see the price setup, and with the help of hindsight, we're going to... And there we go. We got a displacement candle with changing state delivery. Why? Because you see we're delivering by program, and you see price is getting weaker, and it gets the weakest, and suddenly breaks below, creating another block. And now it's going to... could come here, and looking at this, you can simply enter from here directly in standing exchange in state delivery directly above the point of interest, just to make sure, and then targeting the low resistance liquidity. That's the first interest. No market structure shift, absolutely nothing. It's another possibility of another type of interest. So it's a very valid gap created, so we could actually also create with the 50% ring of the fair value gap. So this is another type of entry, stop loss above the point of interest and targeting the same. This will give us 4 and this one give us 2, so it's very interesting. Big difference. Price actually go to the 50% of the fair value, starting coming lower, and we're still inside of this fair value gap. So this fair value gap, when we actually break below, you could be entering based on the inverse fair value gap, so IFG. What we see, we can have several different types of entries here, but we will use the one that best works for you. We're going to use the best. This is the midnight open right here. So we'll see how we are above midnight open. We open here, midnight open. This is our midnight open. This is the level of, we're above, so we're going to go short, so we correspond entering into premium into targeting discount. Otherwise, it doesn't make any sense to go long above midnight. So coming lower, and we actually break below the fair value gap. Another type of interest is entering there directly, but I don't particularly like it. But like, price goes again into the actual FVG, again into the 50 percentile, and some people think the market is random. No comments on that. Let's continue the respect, and the price takes the liquidity level that we targeted. So you could see how this actually plays out and why does the price actually is doing this. So it's coming lower and so forth, and we took the low resistance liquidity pull, so it was very nice. So in the end of the day ends here. This is the daily candle, but we can see that simply you caught the high of the day, which was the day started there, and we started going up, and the high of the day was on the high time frame POI, point of interest, where we actually entered. We could also targeted the previous day low on the framework, but this trade gave us almost 971 to 1, so it's a huge trade, but I really recommend taking some partials right there. So that's the first example. It happened today, and that means this setup is happening a lot. This is every day. Even today, we saw several examples of this. So now, another example that happened around a month ago, right? It looked like very nice. And why? Because simply what we had is a look like this on the big picture, right? So we're actually going lower, and now we're going up, and we're coming to a point of interest. So we could basically either push up or come lower, right? And we might be only pushing up a bit so we can lower. So we're not really sure about what's going to happen, but we're going to follow the plan. And on the 15 minutes, what do we have? We have a low, and we're having equal lows here. And the upside, we're having high resistance liquidity run, and something that you can keep an eye on. And we have this big fair value gaps that is partially filled. And on the upside, I mean, there is nothing here unless we look at the left side, and we can actually see this fair value gap. And there's a fair value gap that is likely slightly above the Asian session high. So now we're going to look into 1 hour, and this is our fair value gap on 1 hour. And this is on 1 hour. We can actually see a bit more on. We can refine. This is the 15-minute being refined into the 1 hour. So we're going to include it into the X. So we're having 1 hour fair value gap, 1 hour fair value gap there, and we're having. This is Wednesday low, so this is Wednesday, and we're entering into Thursday, coming back into the 15 minutes. What time do we look for the manipulation? You know, simply, first of all, the midnight, right? So midnight open, let's map it. Midnight open is right here. This is the midnight candle, and this is where the open price, because it was lower. So now, where do we expect the manipulation? At 1:30 to occur. There we go, 1:30 to 3. This is the time that we're actually going to expect the manipulation to occur, and if it happened before, it's a lower probability of so there we go. So price actually took the Asian side, but it's before our timing. So we come here at 1:30, and we're hitting the POY before. So this liquidity sweep is not valid. We can see that, okay, 1:30 is here. We had a reaction from the point of interest, but the manipulation itself did not happen on the time that is correct. So we didn't have any manipulation. So this is why we're looking for the manipulation now. So now, do we have a higher or a lower point of interest now? We have this high that was created before the manipulation, and we're having this point of interest in which we're just adjusted like a bit there, right? And going back to the 1 minute in this case, because we took an example on the 3 minute the previous, this time we're going to take it on the 1 minute. So we can see that we're looking for this level to be taken and into the fair value gap, hourly and 15 minute. And now playing a price action here. So changing state delivery, it's not valid because it happened before the manipulation phase. So there was a manipulation here, but not in the second quarter. This is why this change in state delivery is not valid. So going into the price action, we're going to be waiting for price to take this high and then giving us the change in state delivery that we're looking for. So this is our manipulation. This is our liquidity sweep. And in what time did it happen? 1:54, and then there is no change in state delivery house now. It didn't, and nothing. So, and I think is actually this candle here that closed below. This candle low was closed below within this candle. So this is where the actual enter. We should the closure of this candle you can enter. So stops above the high, but see, this time we are not able to put it all surrounding the actual POY, but we're just giving a bit of room for price to breathe, and then we're going to target is the actual Asian low, as we talked before and we saw before. Just saw a small sweep with equal lows, and we're going to extend it there, and we're going to have a 6.43R, which is beautiful, which is around 14 13R if we're using to risk. I don't recommend that initially. Just try with 1%. Market structure shift is going to happen right there. Sometimes it still go up, take you out again, and then come lower. So you can actually look for, I would say, the market structure entry. And let's put this to the side and let's see how we. So now we have a market structure shift entry, and we have a FVG with an imbalance. So we can actually enter from this fair value gap. It aligns with the, there we go, bit more up here, so we can have a bit of space, and we have still a very decent position to the 2.52, and even if you enter 50% of the fair value gap is also work. And then price goes a little bit up, and we have equal highs and coming lower, creating another fair value gap, and it takes it directly. Could actually have another entry from there, and also have an inverse fair value gap, IFVG, and it comes lower, and all the way to where? To the Asian low, and sweeping that Asian low again, giving you the existing profit. So two types of entries, both work very fine, and I think this one was the high of the day. 15 minutes. We actually took that high. This is where the day started, right here, and we started going up, and the same thing has up. The last example, it's always like this. We open, we had the manipulation coming lower in this case after the daily high, and a lot of times we have a continuation on the newer kill zone. So if we have the manipulation here and then the kill zone coming lower, maybe we create a fair value gap here, and then on the kill zone with the newer kill zone starts, goes up, comes again here, whether it's another manipulation, mitigation of the fair value gap of the London kill zone, and start coming lower. And that's how we create the high of the day. So let's see if this plays out. Fair value gap, 7 a.m. This is right here. So this is the start of the New York kill zone. Sorry. And we come lower and we create this fair value gap. Actually, there was another entry here, and then coming lower. This was a continuation of the New York. The New York went up into to build a fair value gap on the London kill zone, started coming lower, and it did not take the previous day low. Did not, but maybe in the future. Doesn't really matter because you already took your partials here. But this was 6-1 instead of stage delivery, 6-1, a huge one. And if we actually extend this, you can actually make quite big ones, but only when you're experienced. Those are big numbers. When you can manage your risk properly, you will be able to get your something like that. And the last example, and I'm really hoping that I'm doing a good job in explaining this to you. And I was actually able to deliver it in this way. I talked about this a lot of the times, several different people, but this time I'm trying to actually portray a lot of detail. So this is Wednesday, and we're coming into Wednesday, and midnight open is on this candle. And let's map this up. So if we go below, we're going to go long. If we go above, we're going to go going short. So we need to be in above or below the midnight on the 15 minutes. Let's go for the 1 hour first and see if we see any point of interest. Actually, we don't see anything. We see the tops. We're inside of a range. Maybe might be breaking out about this point or below this point. We don't know as of now, but let's go to the 15 minutes level. It looks like there was some news here, and on the 15 minutes it looks a bit more like why? Because there's an FVG here that is partially filled as well as this order block, and might be having this point of interest, and we're just adjusting here. We had this liquidity level here. We might be looking for a sweep at, and in the top there is nothing that we can see. We have those lower resistance liquidity levels, and you see liquidity to be taken upon. So trend line liquidity, they might be actually looking for those high to be taken, because we're having a lot of liquidity there. Also, there's some liquidity on the lower side. There it is, as you see. Then we have point of interest here. So we might have something like this. But the problem is that there's no point of interest all the way. So we might as well be taking into the point of interest below and then going up and taking the tops. And this might be the most probable scenario. I'm going to take the lows and then take the highs. So what time do we look for the trade? 1:30, all the way here until 3:30. So right here, we expect the actual POY to be taken, liquidity manipulation to be taken. So we're going to go, and boom. We have a hit on the POY. So sell-side liquidity has been taken, and we're entering into the actual POY. We're below the midnight open. We enter the high time frame point of interest into the FVG that is created there. And we're coming into the point of interest, and this looks for night a perfect setup. And now we drop into the 3-minute time frame. Now let's see what we have there. We already did the 1 minute. So 3 minutes, what do we have? Well, market structure shift all the way here and all the way here. So we're going to be taking all type of entries. So we have price action. Looks like we have staging set delivery will be interesting. So here we put a stop loss all the way below the low and up to the Asian session, not the Asian session in this case, but because it's too low, all the actual failure swings we can actually targeting this level of the actual top all the way here. That's the first type of entry that I can have of. So fair value gap is filled. This fair value gap today, it was very interesting, and we saw several different examples of this happening. So we wait for this fair value gap to be filled before we take the liquidity, and the second position would be fill the fair value gap and starts going up. Is going to see no problem breaking above the actual midnight open and coming it retesting it here, and boom, complete hit on the liquidity level on the top. So now this is the perfect example. You see sniper enter, try it, take profit, and you might reverse, we don't know, let's see, and coming lower, and then there's a reversal a bit further on. Just wondering what happened after. Let me just see here. Looks like price it's gonna push. Looks like market makers beginning of a market maker bull, and this is the beginning of a market structure shift to achieve that end. So it might actually go up and take all that liquidity out. So we actually swept that stop loss there, and then pushing up, and there we go. And liquidity, all those low resistant liquidities are taken out. So I'm not going to say that you shouldn't target those, but always be good at what you have. Give it a go.